All right. Good morning, fellow future professional traders. Welcome to the second Technical Tuesday session where we're going to analyze the markets for the Euro USD and the US dollar Japanese pair and share with you exactly what we are planning for the week. I know we have a few ideas. We've been in this thing for a while, so then we have an idea of what may take place in the market. But good morning, Brandon. Good morning, John. Thank you for coming. But we're going to talk about certain technical setups and even answer any of your questions, anything trading related. If you have any questions or concerns, even about our private trading community, you can ask those questions on today's Technical Tuesday session, because this is primarily for you guys, for the free members. We really want to provide some value for you guys and just offer any additional help that we can, but also to answer any questions that you may have about anything trading related and about our private trading community. But with that said, what we can do right now is jump right into the charts and start examining and analyzing what we're seeing in the market. And I left a few lines here from last week. I don't know if you guys had a chance to look at last week's Technical Tuesday session, or if you were here during last week's Technical Tuesday session, but we drew in these lines and we sort of identified what was taking place in the market. And what we saw last week was what appeared to be an ascending channel that was forming on the daily chart. We see that we have channel support right here and then channel resistance, and then we did see a false break, and we may talk about that in a little bit. But we see this ascending channel. But just like what we mentioned during last week's webinar or Technical Tuesday session, this ascending channel is really, it's more than just an ascending channel. If you go back to the weekly time frame, typically I always like to start my technical analysis on the larger time frames like the weekly or daily, because oftentimes the only way you can understand the real bias and what's really taking place in the market is if you get that larger macro perspective. If you look at what price is doing over the past few months or even years, you just need more price data. And going to the weekly and daily chart gives you that type of data and information. But you can see here that we're clearly seeing a particular pattern that has formed in the market. Now, let me ask you guys this question. For those that saw last week's Technical Tuesday video, or you were here during that session, what type of pattern are we seeing right now for this pair, for the Euro USD pair or the fiber, whatever name you want to call it? But what technical setup, what classical chart pattern do we see on this chart right now? Because what we see on this chart gives us clues that we should look for a more sustained move to the downside, especially if you get a break of that ascending channel. So I'm just going to give you guys a few seconds to answer. Okay, yeah, okay. John answered and he said bear flag. Brandon answered and he said bearish flag. And the both of you are absolutely correct. That's exactly what we see on this particular chart. So then for the long haul, well, let me just talk about what the bear flag is. We mentioned this during last week's Technical Tuesday session. But a bearish flag is really a bearish continuation pattern. In other words, whenever you see this type of price action in the market or price behavior, what we can expect is a further slide lower. And typically, what you would typically expect is a particular move to the downside that's the same distance of this move lower right here. This is what you would call the flag pole. So then what I'm going to do is clone this line, and I'm going to give you an idea of how far price could potentially go if we do see a break of this ascending channel to the downside. So then if you actually use the tool, or you look at a bearish flag, we can see price extend all the way down to $1.10 level. This is how far price could move. So then for this year, sometime during this year, it could be over the next few months, we could see price push lower and expand all the way down to $1.10 level. But of course, that's what we're expecting for the long haul, or for long term. We're expecting a move to the downside. And also just looking at the candlesticks, it can give you a clue. And oftentimes we don't use well, I'm not going to say common sense, but sometimes the market will show you what it's going to do. The market will always give you clues and leave a footprint and show its hand. And in this case, we see that we had this correction in the form of this flag. But if you look at this correction, it took just about the same number of candlesticks in this correction to move half the distance of this particular slide lower. Like, do you guys understand what I'm saying? Like, it took about the same amount of candlesticks, which I believe is 8 candlesticks. 1, 2, 3, 4, 5, 6, 7, 8. It took 8 candlesticks to slide lower. And if you do the math, it took about 8 candlesticks. 1, 2, 3, 4, 5, 6, 7, 8. Yep. It took about 8 candlesticks to reach this high right here of this particular correction. So then it took just about the same amount of time just to travel half the distance as it took for price to move lower in this impulsive move lower. And whenever you see a weak pullback like this, then it gives us clues that we could still be in the midst of a downtrend in a bear market and see further slides lower. So then I just wanted to share that because the candles can also give you clues on what could potentially take place in the market. And I know this may go over some of you guys' head, but this is important stuff to know because we have to have an idea of the overall market bias and sentiment for this period. And of course, we look at a number of different factors. We even look at fundamental stuff. I don't know if we'll be able to talk about that stuff today, but I just wanted to share that brief information with you just to let you guys know that we are expecting further moves to the downside. We just need certain conditions met, like a break of these lows right here or a break of this channel support in order to confirm that move or slide lower. But with that said, what we can do right now is go back to the daily chart again. So then let me take you back to the daily chart. Okay, so then we're at the daily chart again, and as you can see, price broke to the downside, and we have what appeared to be, a false break, and we're going to talk about that in a little bit. Then price pushed higher and is currently testing the 100-day moving average. This purple line right here represents the 100-day moving average, and it's finding some resistance right around this area, which is really what I sort of predicted would take place. Especially if you were part of our private community, you would know what I mentioned, but I'm not going to go into all the details about that. What I'm going to talk about right now is this false break right here, because this false break took place and something did happen in the market. If we go back down to the 4-hour chart, and we'll be able to see price action a little bit more clearly, because I want you to understand the logic of the market and how some traders may be trading, because in order to really understand how price may be moving and what to do and what not to do, you have to get in the mindset of other traders that's also participating in the market. And you also have to understand certain market maker activities. So then in this case, we saw this false break, and then all of a sudden price shot higher, and there's a reason for this move higher. I don't know if we're going to talk about it now, due to the Fed, I think expanding the balance sheet and different issues that came out, even with Roger Stone, those issues supported this dollar weakness, and we saw this here climb higher. Like, I know Marvin, he's here right now. I forgot to introduce you guys to my brother Marvin. He's been sitting here quietly. I know I've been on a rant here, but yeah, can you introduce yourself and maybe share a little bit about why we had that US dollar sell-off on Friday, because we saw this move take place on Friday. Right. Well, yeah, good morning, everyone. Thank you guys for joining us for our second Technical Tuesday session. But just like Melvin mentioned, we saw sort of like a rotation away from the US dollar starting on last Friday, and that's primarily due to clues, market clues, and just reports that were coming out, and even rumors that the Fed was actually adopting a more accommodative monetary policy, that they were moving towards easing rather than tightening and hiking rates. So then, of course, on Friday, there was a combination of plethora of things that happened, but it was actually over the weekend that we heard rumors, and there was an article released from the Wall Street Journal that the Fed was going to sort of lean towards actually ending their balance sheet reduction program, which means that they're adopting a more easy monetary policy. And the reason why they're doing this to provide more liquidity to help stimulate the U.S. economy. Since, of course, right now there's this global slowdown. We can see it in a lot of our economic numbers, manufacturing production numbers, inflation numbers. We're seeing, signs of softness coming into the market, and this slowdown happening across the board globally. And we know that if there's contagion with the U.S. and if we're seeing signs of sluggishness and what's happening in China and Eurozone impact the U.S. shores, then of course the Fed's going to step in because of course we're the strongest economy in the world, and what happens in the U.S. will impact other economies as well, since we're in this global economy. So then, of course, once this stuff came out on Friday, we saw a round of dollar weakness and we saw the euro rally on that news. And there's other factors as well. We don't have time to go over everything because this is primarily a technical analysis session, but we do discuss this in more detail if you're a part of our private trading community. Yeah. So yeah, I just wanted him just to give a brief overview of why we saw this move take place, because it was sort of unexpected, but at the same time, those that, the market makers did take advantage of that news information to push price higher. Because you got to realize, we've been in this ascending channel for quite a number of days now. We've been, really weeks, ever since going into last year, we've been in this ascending channel. And you got to realize that, even when the market hit these channel supports, guess what traders are doing? When the market hits support, this channel support, what do you think a lot of traders are doing? Let me ask you guys that question. Like when the market hit this area, when it came down and hit this area right here, and it tested this long-term channel support, the daily channel support, what do you think that a lot of traders did? I think I said marketers. I mean traders. What do you think a lot of traders did when price actually fell into this area? And actually, they probably did it again right here when we saw it test this area again. But what do you think took place? It's pretty, you got to get into the side of traders. You got to understand how traders think in order to sort of get an idea of what could potentially take place in the market. But yeah, I guess no one would know. Yeah, okay, yeah, Brandon, yep, buy the EU. I think Brandon, like the reason why Brandon could say that because he's part of our private community, so then he knows his stuff. He's turning into a very good trader, a very great trader. But exactly, the mindset of a lot of traders is to immediately buy because this area or this level has proven to function as support on plenty of occasions. So then they'll buy here, and then of course traders will look for another opportunity again to buy, and guess what they'll do? They'll buy right around here. This is why we saw that consolidation right around here. They were looking to buy right around here as well. So then we had these buy orders come into the market right at this channel support. So then guess where their stop was, right? Their stop was obviously behind this trend line support, right? This ascending trend line support or channel support. So let me just show you guys something. Like I'm just going to let this be a small teaching moment. So then we had stops here, oops, stops here. All throughout here we had a bunch of stop orders, and all of a sudden, just imagine this whole area being an area flooded with stops, right? So then we had these stops here, and what happened? Well, we saw the strong impulsive move lower. Then guess what happened? Price took out those stops, right? Price took out those stops that was in this area, absorbed all that liquidity. This is what the market makers did because they provide liquidity, but they can also absorb the liquidity. And then after they took out the stops, we saw this huge rally to the upside. So then oftentimes you'll see that type of price action will take place in the market. So then we see this push higher, this impulsive drive higher on the 4-hour chart. And if you actually look at this move right now, we can see that this move to the upside is weakening. And if you look at this 4-hour candlestick right now, it looks like it may close pretty bearish. I know we have about 45 minutes until the close of this candlestick, but if it closes in this fashion, then we can expect to execute a sell position, because this is what you would call a bearish engulfing candle. And then from here, we could expect price to slide and slide lower. And this is exactly what we was looking for. And if you even go down to a smaller time frame, you'll be able to see a certain technical setup take place as well. I'm not going to go into that right now, but if we do see this candlestick close bearish, and if it closes, I know I zoomed out too quickly. If it closes just like it's closing now, especially if it closes below these, three candlesticks, if it engulfs these three candlesticks, then we know that this is a strong bearish engulfing candle, which is a strong selling signal. So then from here, what you can do, if you want to, you can look for an opportunity to sell and place your stop behind this high, right here behind this high at 1450. Place it maybe a few pips behind this high, and then ride this lower all the way down to about the 1360 area, right around here. That's what I would do. That's how I'm looking at this particular trading scenario. So then, right now, look for a selling opportunity all the way down to about 1360 area. The best thing to do is wait for this 4-hour candle to close, and then once it closes, then you can decide on how you want to execute your trade or enter your trade. It's up to you. You can wait until you get a better risk reward ratio, or you can just enter your trade. But yeah, this is what we're expecting. Right around here, we may see price slide and enter this zone, this cluster zone, this zone of congestion right around here. So yeah. I was just gonna add, how like there's various entry strategies that you could apply even to this potential setup that we see taking place that would give you a good risk to reward if you know how to actually enter in. And I know we can't cover everything on these small 25 to 30-minute sessions, but if you do understand just how price action moves and just how to find opportunities that give you a good risk to reward, and that's safe and that are high probability trade setups, then this could be a good opportunity to jump in on a legitimate trade. Yeah, actually, you could have turned this move into a grand slam trade, and I know I can't go into all the details right now, but with a grand slam trade, you can get like a 6-to-1 reward to risk ratio, which means you're at least making above a 5. Let me just say that, because for certain grand slam trades, you get like a 5-to-1 reward to risk ratio. But the point is this: is that you're making a lot more on your on the trade reaching its target than what you would lose if the trade reaches its stop. So that's the benefit of using our strategy, called the Grand Slam trade strategy. It can help you really get an edge in the market. So then, of course, that's the benefit of joining the private community. I don't want to throw a sales pitch right now because I know we do have another pair we want to talk about. But yeah, I know Marvin. Yeah, but I also wanted to add, because we got to keep things in context and just also keep our eye out on what's happening on the economic docket or even on the calendar. We know that even on tomorrow, we have the Federal Reserve Central Bank, their monetary policy statement being released. And of course, just like I mentioned before, there's been signs of them actually adopting a more easy monetary policy and becoming a little bit more dovish than usual. So then that may mean a rotation away from the greenback in the meantime. It doesn't mean that we won't see the market eventually turn and see euro weakness and in comparison to the US dollar, but we may see the Fed come out with statements or either a press release or some type of announcement that suggests that they're actually dovish now, and they're going to push the brakes on any type of hiking and any type of tightening policies and actually move towards more expansionary tools and resources and technologies, in a sense, financial technologies to help stimulate growth in the economy. So then what I would recommend doing, I would recommend just right now, just sitting on the sideline and waiting to see what may happen post the FOMC meeting in order to, trade. But if you want to be aggressive and trade into the news, then you can. Just make sure that you take into account or accommodate some of the volatility that may come out or that may be there as a result of the Fed announcement on tomorrow. Yeah, like you have to determine what type of trader you want to become. Either you take the setups that come when they do come, because they come far and few good setups. So then, you can either take all of them and just manage your reward to risk ratio, or you can be conservative and just wait for the best setup and just be very conservative. But I can give you a hint and a clue. Like a lot of the traders that I know that's making very, very good money, they take whatever setup they see in the market, regardless. I mean, well, I'm not going to say regardless, because they do take into account the risk events that do take place in the market. Like tomorrow, we do have the FOMC statement and the Fed funds rate coming out. They do take into account that information, but at the same time, they don't let that be the sole reason why they may stay out of a position or stay out of a trade. So then you guys got to determine what type of philosophy you want. Me, I'm pretty aggressive, so then I probably would take this trade if I do see it form in the market. But with that said, let me tell you what could also happen. We can also see price pop higher and push into this zone right here that we identified before, I believe on last week's webinar. And if we do see something like that, then look for an opportunity to sell upon bearish confirmation. Yeah. So with that said, I'm going to, for the sake of time, I'm just going to move forward, because I know we only want these sessions to be between 20 to 30 minutes. So yeah, are there any questions about the Euro USD before we move forward? Going once, going twice, Okay, I guess we don't have any more questions. So let me move on to our next currency pair, which is the US dollar Japanese yen, which could be kind of tricky, but we're going to go there right now. I want to make this really, really brief. First, let me go to the daily. And then let me take you to the US dollar Japanese yen. All right. Okay, so right now we're looking at the US dollar Japanese yen, and we're currently looking at the daily chart. And as you can see, we had this strong slide to the downside. So then let me ask you guys a question. It's the same question I asked last week. So then what should our long-term directional bias be? Should it be to the downside or should it be to the upside? Now, I'm talking about long-term. I'm not talking about on a smaller, like 15-minute or 5-minute time frame. I'm not talking about that. I'm mainly talking about what we see right now on a larger time frame. What should our directional bias be? Based on what we see on this daily chart, should it be down or should it be up? Okay. Okay, yep. Okay, John answered. Okay, bearish down. Yep, exactly. So then, for the long term, we're still waiting for this pair to slide lower. And this is what we could consider a potential Grand Slam trade opportunity. I know we didn't have that set up form in the market last week. Price pretty much consolidated, and we're going to talk about that. But we see this Grand Slam or this bearish niche in the market for this pair. But if you look at the left, you can see that price, well, for one, if you look at the right, you can see that price has been pretty much in consolidation. You have these small body candles, and it seems like it's around the same zone. If you zoom in, zoom into this area, you can see that we had these small body candles. You can sort of tell that market has been trapped in the range. For this particular pair, it's been in consolidation, and the longer the consolidation, actually the bigger the breakout. When you see a consolidation happening over a period of days, then that should raise your alarms and know that a breakout is going to happen soon, and it's going to break strongly either to the upside or either to the downside. We have to be prepared for that breakout to take place. But what I want to do is zoom out and show you that price started consolidating right at an area or zone of resistance, right around here, not too far from the 110 psychological area, right around here. And if you look left, you can see structure leaves clues. Look left. But what's resistance here is support right here, and an area of structure. But this is what you would call resistance, and price started consolidating right around this resistance. Or right below resistance. So
below that 110 hand.
yeah, so then what I'm going to do right now is drop down to the 4-hour chart. So we saw price start consolidating at resistance. And just like I mentioned last week, we have this AB equals CD pattern that's still in play. So let me just clone this line, and let me drag it here. And we can see that price is still in the same area or vicinity. So we're expecting a strong move to the downside, because anytime you see this AB C pullback, or this AB equals CD move, or this one-to-one measured move, it could support a strong move to the downside. And what we're looking at right now, if you look at price action right now, is pretty apparent, because we can clearly see that there's an important zone of support or demand that price will have to break below before we can even conclude that this pair will have a bearish slide to the downside. And that particular zone is right here. This zone right here. Right? We have this zone acting as resistance here, support here, and support again. It fell down, retested this level, and then pushed back higher again. So then what we really want to see before we even consider going short, we need to see a break of this low right here, this zone. We need to see a break of this low, which is at 109.147. Around that level or area. What you can do is place a marker or line right around that level. As a matter of fact, what you can do is just take the lowest low, because I believe the lowest low is right around here with this red body candlestick, which is at 109.13 or 109.13. So then what you could do is place a line there and a price alert, if you do have a price alert, to notify you of when price reaches this particular area. Because if it breaks this area, if it breaks this zone of support or demand that we can clearly see is taking place in the market, because you can even see that this area right here is that same zone and area. If we was to stretch this out, you can see that it's that same zone and area. So then this area has been respected on multiple occasions. So then we can expect that if price breaks through this level, if we have a break and close to this level, then we may have a strong slide to the downside, therefore preparing us for a possible high probability grand slam trading opportunity. And remember, guys, the longer the consolidation, the bigger the breakout. And we're just building momentum for when that breakout may occur. Now, we may get a break to the upside. And if we do get a break to the upside, then this will be your trade idea. If price does break to the upside, like this, then wait for price to correct, to retest resistance. Because what was once resistance is will now function as support, and then look for your buying opportunity from there, upon bullish confirmation, and then buy. But yeah, that's what we're going to do right now, is just wait for this to take place in the market. If price breaks this zone, you can wait for price to correct and retest this zone before we look for an opportunity to sell this pair lower and slide and possibly get a huge move to the downside. So this is what we're looking forward to for the US dollar, Japanese yen. Actually, this is one pair that a lot of traders are staying away from. They're really waiting for the breakout to happen. But in the meanwhile, if you want to, you can always trade the range. You can play the range. Play the range. You can play this support right here, which is a good idea, because actually you see a consolidation and a breakout on a smaller time frame right around here at support. And you could trade this resistance as well. Look for some sort of consolidation or topping as well on a smaller time frame. But that's pretty much it for the technical analysis for both of these pairs, for the Euro USD and the US dollar Japanese yen. I know a lot is going on in the market. We do have FOMC tomorrow, so that we may not get a break of this particular consolidation until tomorrow.
Yeah, and we also have Brexit, the vote, the vote on the various amendments to the Plan B Brexit. So then that's going to also create some level of uncertainty in the market until we receive clarity on that, because that's just another risk scenario that's actually impacting financial markets across the world as well. So then, there's just a lot of risk scenarios and risk events that are taking place this week. And, until we, get beyond those particular scenarios, we can expect some form of consolidation or uncertainty. But just like what Melvin mentioned, for pairs like the US dollar, Japanese yen, and Euro USD, since they're strongly influenced by perspectives about the dollar, we won't see any clarity until probably after the FOMC announcement.
Yep. Yeah, but yeah. Thanks again, Francisco, for coming. Yeah, we really appreciate the kind remark. We really want to help you guys out and just give you guys a foretaste of what we provide, even in our private community. I know to us this is basic stuff. This is like your first month information, first tier. The basic fundamental stuff that we typically teach. Or the basic foundational stuff that we typically teach in our private community. But we want to give you guys access to some of that information. It's not all of it, but it's a decent portion of it. But if you guys really want to take your trading to the next level, I would suggest that you consider joining our private trading community, and even joining just for the fact of just getting access to the Grand Slam trading report. I know you guys, this could really help you guys out. I'm serious. Like, if you guys take advantage of this, I know this is the inside of our members area. Our next live trading session with our private trading community is tomorrow. So I know we have that timer right here if you guys are interested in joining. But we do have this Grand Slam trading strategy. And typically we do have a trial, a $1 trial. But we may want to do something extra special for you guys that came.
Yeah, well, we are going to do something extra special.
Yeah, we are.
For you guys that came today.
It's just semantics. Right. We are going to do something extra special for you guys. But, before we talk about that, there is a $1 trial that you guys could take advantage of if you want to. If you just want to give us a test just to see what we share with you guys, trust me, the information is valuable. If you thought this information was good, just think about what you guys would learn in the video tutorials, because we teach stuff that most people don't actually teach. We teach you the real way to trade the market so that you're not making too many mistakes as a trader. Now, let me first clear something up. You will make some mistakes. There will be trades where you will lose. That's part of trading, period. It's part of the business of trading. That's a loss that you have to really absorb in order to continue growing your business as a professional trader. So then there will be losses, but if we can show you ways to mitigate your losses so that you're not really losing anything, like you go in risking 2%, but you only lose like 0.5%, because there's certain things that you can do to help mitigate risk so that in the end you end up being more profitable in the long run, and hugely profitable. So, of course, we do have this private trading community. If you guys are interested in joining, you can join for a $1 trial, or you could access the special that we're going to talk about in a little bit. But this is the Grand Slam trading strategy right here. We typically only unlock it after the 14-day trial. Like, I don't want to provide, because the information in this report and video, it's so valuable. It's crazy. Like, I don't want to go into all the details behind it, but just this report alone could change your life. Like, that's what I firmly believe. Just the report and the video itself. We've had numbers of people from the private community. Like, I know Brandon, he's from the private community. Can you share exactly your opinion? What do you think about the private community? I know he's one of our VIP members, and he comes to almost every meeting that we have, and he's actually turned into a very great trader. So then what's your opinion, before we close this webinar and before we show them the special offer? What is your opinion? I know it may take time for you to jot that down. So then I'm just going to go over what we have. So then, we have the monthly trading videos right here. We have a lot of good training content in this area. This is this gold vault. This is our training vault. If you want to know all of our secrets to trading, it's right within this monthly training section. We have our potential trade setups. Most of them will be sent to our private Telegram group. You know, so then of course, you know, it's always beneficial to have Telegram. We also send some signals and setups through email. All of our webinar recordings are here. Our weekly videos, which is our weekly battle plan. We pretty much give you guys a bunch of different trade ideas at the beginning of the week that could form in the market. Like, this is very powerful, and if you stick to this weekly outlook, you will do very well as a trader. You will make money if you stick to it and if you know how we trade. But you know, of course, we have to add more to this section right here, the live trading videos. This is what I want to have. For some reason, we're having some issues with the recording and just the trading platform being on, but it's going to be corrected. And then we have our private community forum. But with that said, let me see if anyone commented. Yeah. Okay, Brandon said, I enjoy being a part of the community. I've learned more in 4 months than I have in 1 year with other programs, and the trade recommendations are great. I'm now making profit. Okay, yeah. Yeah, simple. Yeah, but yeah, thanks again for chiming in, Brandon. We really appreciate it. But okay, so we know we want to offer something special for you guys. Now, the reason why we offer this special offer, because we had a few emails from different people that were interested in coming and becoming members of our private trading community. And I'm going to talk about those reasons in a little bit. But yeah, Marvin, did you want to?
I was going to say in celebration.
Oh yeah, but yeah, we can say that, you know, in celebration in honor of Technical Tuesday. But you know, really the real reason is just like over the past few weeks, we've had a number of emails from different people asking us about different things that we could do. You know, some people may have issues with, you know, the monthly payment, which is really cheap. If you're actually a member of our private community, and if you're aware of what other people offer, then you will know that what we offer is a good value for the price.
For what we provide.
Yeah, for what we provide. But also we had some people ask us if there's a yearly fee, like if they could pay for a whole entire year. And then we also had some people that wanted lifetime access, like, you know, I want to pay for a lifetime. You know, is there a certain amount that I could pay, or do you guys offer that? I don't like monthly payments. Like, a lot of people don't like monthly payments. So then we understand that. So we decided to offer you guys a special, you know, at a slight discount,
like exclusively to those of you that have come to the Technical Tuesday
session. Or for those that watch it, because you know, yeah. But yeah, like, it's for those that do come, because I know if you watch this to the end, you will, you know, be able to see exactly what we're offering. So then what we're going to do is go to this page right here. Okay, so then right here we have this limited time special promotion for our private trading community called the Lab. And what I'm going to do is just take this link right here, copy this link, and add it to the chat area right now. Okay, so if you want to take advantage of this particular special promotion, you can, but we are offering some discounts, and it's not a major discount, but it does help. You know, it does help you save a little bit of money. But as you guys know, we're offering this amazing discount for the next 72 hours. So if you watch this webinar, if you've came to this meeting, then you could take advantage of this special opportunity for the next 72 hours. So this is what we say. You can join our community, receive a lifetime of trading education, trading support, and high probability trade setups and signals. But this is what we provide. You know, trade setups and alerts, the weekly outlook videos, just, you know, like what we talked about, the training vault, live webinars, homework, quizzes, and exams. So if you really want to expand your knowledge, we also have homework, assignments, and quizzes. We actually need to add more, and we're going to do that in a little bit just to enhance your learning. But we do have homeworks and quizzes back there. We have, you know, of course, trading video archive, lab, community forum, and which I really want to stimulate more activity in the forum. I need to do more in that. But we do have spreadsheets and reports as well. But that's pretty much it. Now, of course, we have 3 different options. We have a monthly option at a discount. We have the 1 year option. If you want to pay for a whole entire year, you can for a discount. And we have this lifetime option right here. And for the monthly option right here, we have it at $70 a month, but it's a 30% discount. So then if you guys feel that what we offer is too much, then you guys can take this offer. It's still a steal. If you want to pay for a year, we have this option as well, which is a 40% discount.
For the entire year.
For the entire year, just pay one fee for the year and you're done with. And then we also have this lifetime option right here, which is for you guys, which is really a steal. You guys will make more from our trade recommendations and from our weekly battle plan than what you would spend for a lifetime of service with us. So then that's one thing I want to mention, you know, off the cusp, is that you guys will have some amazing benefit from that if you do decide to take that. But of course, you know, we're helping you guys save some money. If you guys still want to test this out, you could still take advantage of the $1 trial. You just know that you will have to pay the normal monthly fee. Yeah, the normal monthly standard fee that we typically offer
of $100 a month.
Yeah, of $100 a month. But yeah, and also if you guys join any of these options, you guys will have full access to the Grand Slam report in videos immediately. It won't be a delay. You will have it immediately. But if you want to join, you can go to this page and join now. Just click the join button and then join. It's up to you. We're not going to be too pushy. You know, we're not going to spend too much time on this. But we want to know, are there any questions about anything, even about this private trading community, before we call it a wrap? So yeah, let me pull up. If there's not any questions, then we can definitely call it a day in today's session. And we'll probably see you guys next week, if God's willing, if God is willing. But yeah, we should be here next week. You know, I love doing these sessions and helping you guys, providing good information to help you guys become good traders.
Yeah, I wanted to just let you guys know that this offer, this special promotion, will only be for the next 72 hours, or really up until Friday. So then, yeah, this is a limited time for you guys to really jump on an opportunity just to receive a substantial discount on your membership. So then if you wanted to start the year, if you said to yourself, like, I really want to learn how to trade. You know, I'm tired of buying all of these programs, these services, these robots, trade copying services, and it's providing no benefit to me. I'm constantly losing and gaining money back to back, and I need something legitimate. I need a system that is not primarily about technical studies, but you'll also learn fundamental analysis, intermarket analysis. But not only that, you'll learn a process of risk mitigation that most courses don't really provide. But most courses and what most memberships are lacking is they're lacking education and risk analysis and just setting up risk parameters in your trading. So then that's something that we do go into heavily in our community. So then if you want to just start the year, you want 2019 to be a successful year, a profitable year for you, then I recommend that you come, you know, join our education program. Really, Forex Anatomy is more about education than anything else. Even though we do provide high probability trade signals and setups through our trade channel, and you guys have access to that. So that means you'll earn while you learn. You can actually start growing your account, and you don't even really understand the entire trading system that we teach. But while you're learning our system of trading, and while you're learning about the Forex market and even other financial markets, you can also start gaining while you're learning as well, and making some profitable trades in the process. So then, yeah, just, you know, consider it. This is a special discount that we're offering for the next 72 hours, and you can't beat us a 30% discount on the monthly rate and a 40% discount. That's almost half off of the year of it for a year's worth of trading. But then the best the best option is this lifetime deal, this one-time fee. So then I recommend that you make an investment for your life and consider joining.
Yeah, I know it may sound like a shameless plug, but really it's not shameless at all. We really want to give you guys an opportunity to take your education to the next level, and that's the reason why we decided to present this to you guys, for those that are on the fence. And, you know, for starters, even if you don't join, then it's okay. We're still going to continue to provide value with the Technical Tuesday sessions. Now, you may not get everything we provide, but yeah, you may not learn everything. You may not learn how we do money management and risk management. You may not learn how we may turn a simple trade where we're risking 2% of our capital into a 20% winner, but you will still learn how we approach the market to some degree. And you can increase your skill and just trade a little bit better just from some of the stuff we may share on our Technical Tuesday sessions. But I'm excited about these Technical Tuesdays. This is our way of giving back to you guys, to the free members. Thank you guys so much for being on our email list and for even coming and watching us, because I know there's a ton of people that you guys can follow and watch, but you guys have chosen to come here and listen to us and hear what we have to say. I know we've been trading for close to, man, going on 9 years, about 9 years. And really, the guy that introduced me to trading, he's a Forex millionaire. He's phenomenal. Actually, last week, I can tell you guys a secret. Last week, he actually did very, very well in the markets. I think he made about 60% return on one single trade, one single position in the market on the Euro USD. He made about 1%. He traded that whole move lower and closed out once price pushed higher after it hit the support. But yeah, he does crazy stuff like that. But but yeah, I got started basically off of the information he provided to me, and I've been trading Forex ever since and took my education to the next level. And I want to help you guys take your trading to the next level as well. But with that said, do you have any more questions about trading in general before we call it quits? If not, then we can call it a close. We're well above our time limit. I know I wanted to end this around 7:30-ish, but I know it's about 7:48 or close to 7:50. And pretty soon we should see a close of that candlestick on the 4-hour chart of the Euro USD, which could support a possible trading decision to the downside. But that's it, guys. Thank you guys so much for coming. And remember to count your blessings, not your pips. And we will definitely talk to you guys soon. We will meet again next Tuesday. And have a wonderful, wonderful, wonderful rest of your day, a wonderful rest of your trading week. And remember, we're here for you guys. So you guys have any questions, you can always email us anytime you want. But thanks again for everything. And we will definitely talk to you guys soon. Be blessed. Be encouraged. Don't get too frustrated about these markets because it's only the markets. All right, guys. We'll talk about you guys. We'll talk to you guys later. All right. Thanks again for coming. All right. Okay, bye.